A lot of traders like myself had discovered ICT in 2022, and the high that you get when you first learn something new and discover something different. And once you have seen the matrix, you cannot go back to unsee it. Now you are feeling all excited and invincible to make all the money in the world after watching ICT. I make the same mistake of jumping into live market thinking that I'll be part of the smart money gang and thinking that the price will move the way that I wanted. I was completely wrong. Have you ever asked yourself this question of, I have watched all the videos, now what? Where is my money? You feel like something is missing and you are not alone. There is a missing piece, a connection link between knowing and doing, a misconception between watching ICT videos and thinking that we know it all versus applying the knowledge in the market. Even ICT recently tweeted about understanding and retaining the skills is far more important than just watching all of his videos. There is nothing wrong with ICT concepts or the strategy itself. So what's the secret? That missing piece is the trader lack of practice. The amount of time a trader put into to sharpen his new skills in the market through backtesting. Backtesting is like a practice ground for yourself. The more you sweat in the dojo, the least you will bleed in the battlefield.
I know Kung Fu.
Do you know that Kobe Bryant was making 2,000 shots per day? And imagine if you have backtest 2,000 trades per day, how good of a trader you will have become. So the question still remains, how do you backtest? In today's video, I'm going to show you how I will backtest ICT concepts as a beginner, focusing especially on his 2022 mentorship model. This is the part 2 of the series of how to study ICT concept as a beginner. Of course, there are so many ways of backtesting, and here's some of the ways that I personally use which can be helpful to you with your backtesting journey. Backtest should be something fun, exciting and engaging. I don't know about you, but I felt like I'm on a new adventure exploring and hunting for gold and treasures when I'm doing backtest. Before any backtesting, it is important to have a clear strategy of what you are testing. It is like driving a car. You need to know where you're going and where do you want to go. Therefore, let's keep our strategy simple and easy for you to understand and to execute according to the plan. Let's bring everything you learned together from ICT and let's have a proper trading plan. Let's quickly review and revise what we have learned so far. For bearish setup, we want to look for higher time frame key levels. These levels can be fair value gaps, all highs where buy-side liquidity pool is resting. Prices are always drawing to these levels like a magnet. Once price reach these levels to fill the gap or to take out our liquidity during New York kill zone, we will start looking for market structure shift with huge displacement on the lower time frame. After that, we will start looking for any fair value gaps for our entry. Everything will be reversed for bullish setups. We will look for all lows or bullish fair value gaps. For your own reference, ICT summarized his 2022 model in episode 24. Let's go into the chart and look for some examples. Let's assume that we want to backtest for the month of July. I will draw 2 vertical lines to block out that period of time. And we will use the replay button to backtest for the month of July. Now looking at the chart, we are long-term bearish. Before we mark our recent swing highs, swing lows, or even fair value gaps, first I'll ask myself these few questions. Where is price right now? So price is around here. The second question I will ask is, where did price come from? We can clearly see that price has a leg down and take out this sell side liquidity and taking out the sell side liquidity around here as well. We can clearly see that price has made a retracement after making this impulsive displacement move. After the price has taken out the sell side liquidity, we have a fair value gap form around here. We also have a gap that form in price, which the price later come back and refill this gap. Let's mark out our recent swing highs and swing lows. This will be our recent swing highs. And at this level, we have our buy side liquidity resting here. And we have our recent swing low, which has not been taken out, and we have our sell side liquidity resting here. After price move from this point to this point and taking out our sell side liquidity here, and we have our recent swing low where we have another sell side liquidity which has not been taken out. According to ICT, once we taken out our sell side liquidity, the price will want to draw back to our fair value gaps or even our buy side liquidity. The price have a very energetic displacement move up, and we have a break in market structure. Even though our long-term bias is bearish, but based on the current price action, our daily likely bias will be bullish. And we also have this bullish order block. According to ICT, this is a very high probability bullish order block, because once we have this order block form and we have this displacement move up, we have this fair value gap going together hand in hand with the bullish order block. So once we have this bullish order block, we want to make sure that the price will not trade and close below the midpoint of this bullish order block. Now we know that our daily likely bias is bullish. We want to see where is our next likely target. The price can target this recent swing high where we have our buy side liquidity. Price is very likely to draw on to this buy side liquidity. Another reason is that we also have this fair value gap as well that we need to fill. And for our strategy, after we know our daily bias is bullish, we want to look for liquidity run below all lows or to fill our bullish fair value gaps. After we have identified our all liquidity that has the potential for the price to run to, and when it happens during our time zones, and we'll wait for our market structure shift and wait for our displacement and look for our fair value gap entry. Once we enter the trade, our backtesting strategy will be only targeting 1:2 risk to reward ratio, just for the simplicity of this video. We can clearly see the price is holding around on these levels, and we can also clearly see that price is attempting to move higher. So the price is drawing to this fair value gaps and also our buy side liquidity right around here. Once we have this confirmation, we can look into our lower time frame to look for our setups. Before that, let's highlight our previous day high and previous day lows, because those are the very sensitive areas price is likely to draw through. Looking at the lower time frame, we can clearly see that we have our sell side liquidity has been taken. This is our relatively equal lows, and price have a very big reaction from this point. Since this is the end of the trading day, we want to move forward to the next trading day. But we need to keep in mind our previous daily high and previous daily low for our reference point. Okay, we are starting a new day and we have our midnight open. We can see that our price have dipped down, and we are only going to focus on New York Q zone, which is between 8:30 open to 11:30 open in the morning session, and for the afternoon session will be 1:30 to 3:30 p.m. So we won't be participating in any trade setups that form in London session. So let's wait patiently until we reach our New York Q zone. We can see that we have our liquidity grab around here on our 15 minutes time frame. This is our sell side liquidity that has been taken. Which is very close to our New York Q zone open, so we can look into our lower time frame to see if we have any setups. We actually do have a setup form. We have our market structure shift. We also have our displacement right over here. We have our displacement right over here. So we want to look into our low time frame to look for our setup. We actually find our fair value gap right over here, which has been filled. We can actually take this trade. You can just buy at the market order. And we do not want price to trade below these order blocks. So we'll place our stop loss around here. And we'll be targeting our 1:2 risk to reward ratio right over here. So let's see how the price play out. Before you see the price play out, make sure you take the screenshots so you can lock down your chart, lock down your journal, so that you can go back and revise in the near future. As you can see, we hit our profit target, and price is very likely to draw on to this liquidity grab, which is our buy side liquidity. There you go. So we can clearly see that we don't need to hit our big target as long as we are trading aligned with our daily bias. We look for our liquidity run in our kill zones, which is right over here, 8:30 open. We have our kill zone open, and we have our market structure shift, and we look for our fair value gap, and we target our risk to reward ratio 1:2. So let's go back and to revise what actually happened. So let's hide all our charts. Drawing is kind of getting messy. So like I said, we have this is our recent swing low, and this is our sell side liquidity that has been taken, and our sell side liquidity that has been taken right over here as well. And the price is originally came from this bearish movement. After that, we have our turning point right over here, and we took out our short-term high, and we actually have a displacement and breaking market structure. Once we have that, we have our fair value gap form here, and we also have this confluence with our bullish order block, and the price has been holding around this area, and our short-term daily likely bias will be bullish because price has already taken out our sell side liquidity. Our next target will be these fair value gaps and also these buy side liquidity, or even eventually we can even reach our buy side liquidity right over here, these old highs. We don't really need to target all the way here. We just need to know, or even all the way here or here, we just need to know the price is moving higher, and we can place our trade based on that direction. So this is just a very simple way of how I backtest. Of course, for any bearish setup, you can just look for anything that's in reverse. When backtesting, you have to stay very truthful and honest for all the setups. It is time to forget about making money, winning and losing. You'll be lying to yourself if you do this. So let me show you an example. You always want to make sure that you use the replay button so you can watch the chart as if it's playing live. You do not want to go back to the old data and look for price, and you are doing this, then you'll be lying to yourself. Let's say we have our fair value gap form here. We took out our relatively equal highs, our buy side liquidity, and we have our market structure break, market structure shift with huge displacement. And you do not want to be going to the chart and thinking that, I'm definitely going to short here, place our very tight stop loss around here, and I'm going to target 1:5 or all the way until here. There's no way that you can catch such a move, because one price retrace, you might be fearful and scared that it might go and take out your stop loss. This is just trading in hindsight. It's nothing really wrong, but it's just like you're just lying and cheating to yourself that, instead of just targeting and focusing on making the highest risk to reward ratio, it's more important just to follow the trading rules and trading plans, which is right above here. This is our trading plan. We want to look for our daily bias, and we want to find setups that is aligned with our daily bias, neither bearish or bullish, and we want to wait patiently for our liquidity runs to be taken out in our New York kill zone. After that, we want to look for our market structure shift and our fair value gap for entry, and targeting 1:2 risk to reward ratio. There's no way any traders can make such a trade thinking that they can place such a small stop loss and they're gonna target all the way 1:17, 1:18, such a high risk to reward ratio. That will be lying to yourself, and that will not help you with taking or understanding the ICT concepts in the real market. This is just one of the examples that are how I backtest and how I'm learning ICT. And if you find this helpful, make sure you stay tuned. And before the end of this video, I just want to let you know that I have updated my screenshots and notes so you can download them from episode 11 to episode 20. Make sure you check them out in the description. Hopefully they can help you with your studies, and always apply what you learn in the market.